Good evening, everybody. Welcome to another episode of the Good Deeds Note Investing Podcast. I am your co-host, Chris Sevney, and Gail Anthony Greenberg will be joining us a little later. And tonight on Open Mic Night, we have a special guest. We have Debbie Mullins with Cole 10 Group, who I won't introduce her how she wanted me to, but uh, no, it's got Debbie on to talk about bookkeeping tonight because as we wrapped up the year, there was a lot of discussions in a lot of Facebook groups and Bigger Pockets and other groups just on people trying to arrange their books because last year was a year where a lot of individuals started doing more deals, especially in the circles that I am in, and a lot of times I would say talk to the bookkeeper. And I know, Debbie, you do books not only for myself, but a lot of other note investors out there. So we wanted to bring you on and have you talk about some of the top do's and don'ts with note investing.
Thank you. I'm excited to be here. I'm coming to you from Fort Worth, depending on where you guys are, but I'm excited to be here and help.
So good. And I do have, a bunch of people on here. If you have questions as they come up, feel free to put them in the chat or in the question box. And I just want to reiterate that, Debbie is not an accountant, so she's not going to provide any advice on whether you should have an LLC or an S Corp or, things along those lines. This is, I think, going to be more geared toward, if you've got, JV partners or just have things setting up your books and making sure you're doing them properly, or if you're looking to have somebody do them, definitely talk to Debbie, because I know looking at the books and the balance sheets and trying to get things to line up and stuff, it is a little confusing. So just wanted to throw it out there first. And with that, Debbie, what are some of the things that you have seen or in the past? I'm sure you've had people come to you after their books have been, maybe a little bit messy in some sense. So I'm curious to some of the things that you see or some of the mistakes you see people make that are pretty simple things to fix, that if you start early enough when you're doing your books, can probably save you a lot of headache and time.
Yes, and that's a great segue. And I do have a few things here that I thought might take 10 or 15 minutes to kind of go through, and then we can definitely do any Q&A and I can answer specific questions. I don't see a Q&A on here, Chris, just in case.
Okay.
I should. I know I have in the past on them, but of course you can feed me questions.
Yeah, I'll feed you the questions as they come through.
Okay. So that really is key, is that a lot of times you don't really start doing the bookkeeping until you're well into learning about and getting involved in note investing. I certainly start working with clients who have been doing it, for a year or two on their spreadsheet, and then they feel like they are large enough that they need to now work with a bookkeeper. But it's really important that you get started with focusing on your books, whether it's with a bookkeeper or not, from day one, because it literally is the most important part of your business, and it guides every transaction that you ever make, any check that you ever write, and any deposit that you ever receive. And with that, for people who aren't ready to work full-time with a bookkeeper, I do different levels to help investors. So sometimes I just set up the QuickBooks file initially and then turn it over to investors to work on themselves. And then there's times where I can just schedule half days for those people who are working on their books themselves. And we look at your profit and loss, and we look at your balance sheet, and we make corrections. And so I'm doing that with you. So you learn a little bit along the way, so that maybe the next quarter or in 6 months when we do it again, you just feel a little more comfortable with it. And then I do the books monthly for investors as well. So if you get to that level and then you become too busy to do it yourself, that's a great time to hand it off to a bookkeeper. But you really do learn a lot along the way, and you'd probably be surprised how detailed and nitty gritty it can really get when we're breaking out every transaction that you ever make. But with that in general, so you are a business, and I started to say a small business, but not necessarily. You are a business, and so you really want to also get that business structure set up. And it sounds really simple, but you need a business checking account, a business savings account, credit card. And then if you do get into rentals at all when you're taking on properties, you need a separate savings trust account for any security deposit that you might be holding. And then most important by having those accounts is you cannot or you should not commingle that with any of your personal funds. And if you do, there's always ways to get around that, but just really think about, this is a business and it needs to stand alone on itself. Mm-hmm. With that, one of the most important things you can do to protect yourself, we fall into the W-9 and the 1099. There's always lots of questions about that, but every vendor that you work with, which is anyone that you pay, you should have a W-9 on file from them. It has their name, their address, what type of entity they are. They sign it and they date it, which means that any of the information they gave you, if it's inaccurate, then it falls on them and not on you, right? But you're going to use that W-9 information to process 1099.
Okay. I was going to say, Debbie, and how often should you get a W-9 from people?
You should get your W-9 before you ever pay anyone a dime, because you will never get it after you have paid them, or it's very challenging. And anyone who won't, and the reason you have to have it falls into the Patriot Act. And what it means is that the government wants you to be able to prove that you are working with legitimate businesses, that you're not just creating false companies and writing checks to pretend like it's an expense, but you're writing the check to yourself. And so the W-9 stands on its own. It helps with 1099s, but people try to combine the two a little too much. Try to intermingle it a little too much. Okay. So W-9, you get that W-9, and if anyone, I'll see a W-9, and on there, you guys probably have seen them, but you either are putting your social security number or an EIN number. And I'll see people only put like the 4 digits of their social, or they'll leave off their EIN number. But I can tell you that if somebody cannot give you a W-9, then it's probably someone you shouldn't be working with. It is their name, address, their company information, right? What type of entity they are, their social security number or their EIN number. And if you think about it the opposite, is there any reason you could not give that to somebody? So they should always be able to give that to you.
Yeah, and I want to just mention that even if you have somebody going to do clean out on a property or things like that, even if you find them on Craigslist, get a W-9 from them. And the reason I mention that is because if they ever do stiff you and don't do all the work and you paid them, you have the W-9, so at least you can 1099 them, so at least they're going to get whacked for the taxes that you paid them.
Exactly. And if they lie on it, they lie. But if it's signed and dated, then it's the responsibility now falls on them and not you.
Mm-hmm. Debbie, I just want to mention your sound is fading a little bit in and out. I'm not sure if you're on there. It's good right now, but it gets a little staticky and fades in and out a little bit.
Okay. I will try to speak very clearly, but let me know.
Okay. No problem.
I don't know if it's just internet or something.
Yeah, could just be the internet, but it sounds good now.
Okay. So the other side of that is the 1099. And 1099s, there's different types. And I will tell you right now that the irs.gov is a great website when it gives you lots of information about how to file a 1099. You're probably looking at 1099 miscellaneouses and or 1099 interest. Those are probably the two most common that you're going to have to send to your vendors or JV partners. But there's a lot of criteria that goes into that. It depends on the type of entity. S corporations and C corporations, you do not have to give 1099s to. Personal money, private money, individuals, you do not give 1099s to them either. And that's probably one of the biggest shocks, I guess, for most people.
So if you don't 1099 them, it's up to them to report it on their taxes then?
Right. So if you would read, the laws, everyone is required to report their income, whether or not you receive a 1099. So the purpose of the 1099 is that I send it to the person, but most importantly, I'm sending it to the government. I'm sending it to the IRS. So they have a record of it. So if that person then does not report the same income, they have a way to match it, right? So I've sent it in, but somebody else doesn't report that they received that money, then that's a red flag for the IRS. So the 1099 is really a tool for the IRS because everyone is required to report income regardless.
So we do have a few questions. One of them is, so on W-9s, if you're buying a note from a hedge fund, do you need a W-9 from them because you're giving them money, but it's part of a transaction?
Right. You're buying it from them?
Yeah. So if I buy a note from ABC LLC, as part of a transaction, because I know typical sellers don't give you W-9s. Is that okay? It's like, a real estate transaction almost, where if you're buying a note from somebody, do you need a W-9 from them for any reason?
No, because you are, sorry, I started thinking of it backwards. Well, two things. Yes, I would get a W-9, and you're not going to be 1099ing that person more than likely.
Mm-hmm.
But you're getting the W-9 because, again, you want to make sure it's a legitimate company.
Yep.
And here's what I always tell people. If you think about large companies, they sometimes have a full-time person who is in charge of vendors. That's their job. They're vendor managers. And so, and just like everyone else, we have databases, right, that we're entering our contacts in, their name, their address, their phone number. So that's what I always tell people is, I'm going to write you a check. Can you send me your W-9 so I can put you in my system? Because that gives me all the information I need to enter you in my system. So just, yes, always get a W-9 from somebody.
And then the other question is, how do you report expenses if you hire a VA outside of the U.S.? I know a lot of people go on websites like Upwork and hire somebody for, on those sites. How do you, deal with that stuff?
Are the companies in the U.S. that you're actually paying, and then they're paying the virtual assistant?
Yes. So typically it's Upwork, I know, is like takes the money from me, and I believe they pay them and I get charged a fee. So
yes. Yeah. So it's still, you're still really working with, a U.S. company. That also kind of leads to, there's so many online options and systems that you guys utilize and programs out there, and you're paying monthly fees to belong to those. And so are you going to get a W-9 from one of those website vendors? Probably not. I mean, technically they should be able to send it to you. But also more than likely they're probably a corporation, or at least an S corporation, and they're not going to get a 1099 anyway. But here's the best tip I could ever give you. Pay for everything that you possibly can pay with a credit card. Because anything you pay on a credit card does not have to be reported later on the 1099. So that's kind of
wow. I did not know that. That is
because the credit card companies are reporting that. So it's the best tip I could ever give you.
okay.
Get that business credit card set up, and as you continue to use it, your line of credit will keep increasing, and you can use it for more and more items.
Yeah, but that's a credit card, not like a debit card.
Right. Credit card.
Mm-hmm. Okay. So.
And I love it if you use lots of credit cards, because at the end of the year, I don't have to do as many 1099s.
What about like cash advances, and somebody threw on here, or PayPal, you don't need to report either, is what it says.
So that's a whole nother section. So in running a business, and I know you can do it, and it's certainly okay, but you really should not be using PayPal, Venmo, Zelle, third-party type vendors to make financial transactions. You are a business. You should be writing checks directly from your business to whomever, and you should be getting deposits directly from whomever. And I know we don't always physically write checks anymore, but you should check with your banks because, well, there's bill pay, right? But bill pay sometimes takes a long time to get a check to somebody. But they have ACH, and I don't know if you're familiar with that, but that's really it's sort of like a wire. It's one account to another, but it's an ACH, and it's usually, I mean, in some business accounts, I've seen it's 19 cents per transaction, and basically you just need that person's routing information.
Okay. We do have another question that came through, and person asked that they were informed by a borrower that this individual was acting as a private, this individual gave somebody some money as a private lender, and that he would be sending them a 1099, but the loan came through their IRA. So, typically you don't, 1099 our IRA. Is that correct?
Yes. And so that's really important, is when you're getting money from someone, you're getting a deposit from someone, and it comes to you from John Smith's personal account, but now he wants to say it's from a trust. It's really from his personal account. So, when you're getting money directly from someone, the name that you're getting the person from needs to be what would need to be the trust in that, in that scenario.
Okay. Let's see. And then, okay, because somebody mentioned that they heard from another individual who a bunch of us use out of an accountant that mentioned something about the PayPal. So we were talking W-9 basically is kind of the kickoff, which you get from every vendor. The 1099, we talked about getting, basically you're talking about the 1099 interest and the 1099 miscellaneous.
I sent you an email, Chris, with a link to the 1099 miscellaneous instructions.
Okay. We'll put that in the show notes.
Mm-hmm.
Okay.
Okay, so have I given enough information on that subject?
Yeah, I think you've covered a good amount of topics on the W-9s and 1099s. One question I was going to jump back to when you started out early on was about, people doing their books and things like that. Question I wanted to throw out there is, say I am a individual who I gave somebody money to invest in a deal. Should they also be doing the books as well for their own, because it's still a business, but they're not the lead manager, but they should still be doing their books as well, correct?
Absolutely. I mean, everyone needs a system to be tracking any of those financial transactions. So for me, of course, the best way to do that is in a system, bookkeeping system versus a spreadsheet. But yes.
Okay. So whether you do it in a spreadsheet or in some fashion, whether you are investing with somebody or the lead investor, you definitely want to just, keep track of everything.
Yes, absolutely.
Yeah, just don't take your partner's word for it at the end of the year of how much money you got or the accounting. Make sure your books match theirs.
Right. Well, and when you talk about that scenario, I see that as you're giving them money and then you're hands off and they're managing it. So absolutely, the reporting that they give back to you they have to have something in place to do that, and something that you can trust.
Yeah, no, absolutely. So okay, so we've gone through, the initial W-9, 1099. What are a few other things people should be aware of?
So I also emailed you a link to the IRS Schedule C. And so if you're at your computers, you can always Google that form and pull it up. If you're an LLC, most of you will be reporting on a Schedule C for the profit and loss of your business. And I think that this is something I find that as people start working with a bookkeeper and thinking about their taxes, they start understanding how that money in their LLC is now going to affect them on their taxes. So when someone takes money out of the company, it's an owner draw, and people start thinking of that as a salary, or that's their income. And
Okay.
that's not the case. Because they think, oh, I took $20,000 out of the company, that's what I'm going to be taxed on. But that's why you need a profit and loss statement, because it's whatever that bottom dollar is at the bottom of your profit and loss, that's your net income, and that's the total that's going to be rolling onto your personal taxes.
Mm-hmm.
So you could make $100,000, and if you only took out $20,000, it's the $100,000 that's going to carry over.
Mm-hmm. No, that's good insight. And one thing I just want to question I'll ask as we talk about, profit and losses and books and so forth is I see a lot of people, ask the question too, there's two types. You can do a cash-based or an accrual-based system for accounting. And each one, I think, meets the GAAP, which is, I think, good accounting. I'm sure you know what that means.
The general accounting practices, yes.
Okay. So can you just explain to somebody the difference between cash and accrual based? Because I know like in QuickBooks, there's reports that you can run different ways, and a lot of people sometimes just get lost with that.
Right. So for the most part, you want to be cash based. The difference is it just means that when money comes out of your account, that's when you recognize it. And when money hits your account, that's when you recognize it. So versus accrual is if I send an invoice to you today, and today is March 7th, I'm going to recognize that income on March 7th, even if you don't pay me until April. So that's accrual. Cash is when you pay me in April, that's when I have income, and I recognize it in April. So accrual accounting is much more, it's a little more complicated to think about. So most people are cash based, and especially small businesses.
Because I know like at the end of the year, I had somebody email me and say like, hey, look, I had a property close on December 31st. And I got the money on December 31st, but I didn't pay off my, the people part of my venture on that till January 2nd. And they're like, well, how is that treated? Because
yes, it's actually very simple, because that's also where a lot of times you tie the money that your JV partner has given you to the asset directly. And it's really just a separate liability. Someone has given you money and you owe that money back. Mm-hmm. So on your balance sheet, that's handled under liabilities, but the asset is handled separately. So, because that same scenario, you could have sold it and made money in December, but what if you didn't pay your JV partner until February? That's okay, because they're not really connected. Because at the time that you sell the property or sell the note and you get that money, let's say You have the asset, you have the holding cost, and now altogether you're making $10,000. But you're making $5,000 and you're giving your JV partner $5,000 because you're splitting the profit. Well, on December 31st, that's going to get calculated and your books are going to show that you made $5,000. Your books are also going to show that you owe your JV partner $5,000. And that hits the balance sheet. And whenever you decide to pay them, that's fine because it's not hitting your profit.
So as we talk a little bit about balance sheets, I'll first ask you two questions that we've got, and then I want to just dive in quickly, talk about balance sheets for a second, because I think some people may have some questions on those. But one question that came up is, what are your favorite accounting tools? QuickBooks, Free Agent. What do you use?
I use QuickBooks for the desktop.
Okay.
It's very different than QuickBooks Online. QuickBooks Online, for me, and in my opinion, it tries to do too much for you, and therefore it's really hard sometimes and difficult for the end user to manipulate it or even understand what's going on behind the scenes. The desktop version you have complete control over, not to mention there's a huge cost savings because you only buy the desktop version, once every 3 or 4 years, and even longer unless you're just forced to update for a CPA or something. But QuickBooks Online is a chunky little monthly fee. So I'm definitely a pro QuickBooks desktop version.
Okay. So I want to just talk about balance sheets because for a lot of people, if you've never, I'll say, operated a business and seeing a balance sheet for the first time, it's confusing.
Yeah.
It's, the way I think of balance sheets is, I like to say, your assets have to equal your liability plus your owner equity. But when you put, basically that note deal in there, you get, what I like to do, Debbie, is if you could just explain in simple terms, if you get $25,000 from a JV partner and $20,000 goes to the seller and $5,000 goes to holding costs for additional expenses, do you mind just spending a few minutes explaining to people what that would look like on a balance sheet or where it would go? Because I know some people struggle with that.
Sure. So again, a lot of people try to tie that transaction together, and it's not. So when you get the deposit from your JV partner of $20,000, maybe 10 of it is to buy the asset and 10 of it is to cover costs. That part of it is really irrelevant. The $20 or the $20,000 deposit from your JV partner gets coded to one place, and that's the liability.
So your books in reality don't care how that money's separated in reality. It's right. You owe that person $20,000 that they just gave you. That's your liability.
Exactly. And it sits all by itself. It's not tied to the asset. The asset is then you pay $10,000 for the asset and you write that check to that person. And I would say check, but you wire it or whatever the vehicle is. But when you purchase that asset, then it gets coded as an asset at that time, which falls towards the top of your balance sheet under the assets. And it will be a $10,000 check that you wrote to that person, and it gets coded. It just gets coded up there. And then you create another asset account to collect and gather all of the expenses that you're spending on that asset. And it's set all by itself in a holding cost account.
So I created from one of my deals that I have, I took the names out of it, but I created a little balance sheet that I can share with people, and I'll put in the show notes so you can kind of see like the historical, how, the money comes in from somebody, how it goes to the seller, and then how money comes in from a from the servicing company, because that's something that I learned, I'll say the hard way, Debbie, is, breaking out principal and interest.
Yes. And that's really a key in the notes. When you do have those performing notes, that is key, and that's when you really start to learn how your money works. Because when that principal, every transaction that comes in from Madison, for example, it all gets broken out into a million. One deposit from Madison can be broken out into 6 or 8 different areas. Principal goes on the asset. The interest may come to you as interest income. It may all go to the JV partner. Maybe you give it all to them. You may split the interest 50-50. So those are the transactions that you'll spend the most time on.
Yeah. So one question that came up kind of related to this is, if you have an equity partner who pays a contractor directly, and that's part of the deal, that person's going to get that money owed. Can you explain how that gets input into your QuickBooks or into the system?
It's really important that if you are managing the asset, that you pay all the bills. And I know that sometimes it's easier than the JV partner giving you money and then you paying the bill, but that's how it's going to hit your book. When you start doing things outside of your business account, and that person is now paying a vendor and the money never hits your account, you're going to have to start making journal entries, and those become more high level of bookkeeping. So you can record those, but that's a little more high level. So the most important thing you can do is to make sure if you have the asset, then you're making all of the payments.
Yeah. So have that equity partner cut you the check, or even worst case, well, no, you wouldn't want it to be a joint check, but yeah, have them cut you the check and then you write the check to the contractor. That's what you want.
So that's probably from a bookkeeper, that is the hardest part of bookkeeping, is because someone will say they bought an asset, or the JV partner gave them $70,000, and we go for a month and I don't even know about it because it never hit the books. So how do you know it happened? So you really want that audit trail. So everything should hit your business account.
Yeah. And if it happens, and it will happen sometimes, maybe on occasion, that something like that happens, it's not the end of the world. You just got to make sure that you're communicating with your bookkeeper or whoever it is that's doing this to make sure they put the journal entry in, because if not, like Debbie said, it's going to completely throw your books way out of whack.
Right. And you'll be talking about things that I won't even know about. And I'm like, what are you talking about? Because I never see it. So I don't know that. And absolutely, journal entries are part of bookkeeping, and that's how you make adjustments and in the books. It's just definitely a more higher level entry that you're trying to make. So if you don't understand the basics of where you're trying to make that journal entry hit, then it's really hard to create one. But everything can be captioned, even something like as simple as you went out to dinner and you used your business debit card for a personal meal. Those things can all be coded. It just becomes an owner draw out of your business account. Same thing, you accidentally used your personal card to pay for a business expense. We can enter that in your books as well. There's always a way to capture something. You just want it to be as straightforward as possible.
Okay. So, sorry, I jumped off topic a little bit, just touching on balance sheets, because I know, first time looking at balance sheets for me, sometimes they're a little confusing because you're, sometimes looking at, okay, this is, the double accounting method of, making sure, it's an asset and liability, or, it just was a little confusing in some sense. So I just wanted to kind of throw that out there for people, but sorry to somewhat interrupt if you want to keep going.
No, that's okay. I think when someone is doing that, so that when that liability hits, you get this $70,000 and that hits. So just like you, people are like, well, where is the Where's the other side of that, right? The double entry. Well, you have the liability. The other side of it hits your bank account as a deposit. And that is the other side of the transaction because your bank account is an asset. So the deposit is hitting your asset. The liability is hitting the liability side, and that's how it stays balanced. So that kind of happens behind the scenes a little bit.
Mm-hmm. Yeah. And yeah, and that sometimes can, confuse, again, it can confuse people because it's like, okay, hit my bank account, but you need to balance it off on the asset side. So sometimes, or put it on, I'm sorry, on the liability side. So I know some people, again, get confused a little bit. And my recommendation is for people, go on YouTube and just watch like a 15-minute video on, comprehension of balance sheets, understanding balance sheets. And it's very informative just to kind of get a very high level education on them from, some videos and stuff. Wouldn't you agree?
Yes. There are a lot of great, short, simple tutorials out there.
So, okay.
Okay, you ready for the next one?
Yes, go ahead.
Okay, so I also emailed you a link to the Schedule C. So the reason, if you're at your own computer and you want to pull that Schedule C up, it'll just be a PDF if you Google it. In the very center of it are expense accounts. People get very creative in what they think that they can charge or deduct as a business expense. So if you ever look at that Schedule C, you're going to notice that there is not a field that can be filled in that says training. And you guys spend a lot of time and money learning about notes and training. So I just want to point out that technically there is no expense category to train to be a note investor.
So what about under 27A, like other expenses?
Yeah.
Okay.
There's always other, right?
Yeah.
So, really what happens is, for example, you pay $97 a month for Scott Carson.
Yep. For his WCN crew. Yep.
Yeah. So those get coded, for me anyway, I code them to computer and internet category. All of the online type services get captured under that computer category. Online services, basically.
So where would online services, though, go on a Schedule C? And if people can see my screen, I have the Schedule C up there.
Online services goes under computer and internet. Just like the website. The website goes under computer and internet, maybe software, hardware.
Would that be office expense, or I'm just looking at the Schedule C right now. I don't see computer and internet on there. So.
Well, it's going to probably be other. So
oh, okay. Yeah.
It's going to not really help me with my example much, but computer expenses are, they're very well known in this day and age, right? That every business has computer related expenses.
Mm-hmm. Okay.
So if you're going someplace for an expo or some type of event, and you pay a registration fee, which really in your eyes is for training, mm-hmm. that gets coded as a travel expense. And under travel, I have air and hotel, and I have registration fees. Mm-hmm. So those type of things can be captured under travel. And then there's the big one where sometimes they're really large, $15,000 and $20,000 costs for different training programs.
Yep.
The CPAs I work with, if they see those on your books, they code them as due from shareholder, which means you owe the company that much money back. Now, it can sit there as due from shareholder forever, mm-hmm. but they don't capture that as an expense. Mm-hmm. That would be a big red flag for the mm-hmm. IRS to see $15,000 for training.
Oh, okay. So one question that popped up is, why would a note be a Schedule C? It's more your business, your LLC, because Schedule D, if I recall, is for like capital gains, and Schedule E is more for rental property, correct?
Well, then Schedule E is, it's just the profit and loss for your company. So it's not per note, it's for your whole company.
Yeah.
So when you give your profit and loss to your CPA, the profit and loss has subcategories, right? It has the total for office supplies. It has the total for your telephone expense. It has the total for computer expenses. And that CPA takes those totals and he puts it on the Schedule C. And then the bottom dollar on that Schedule C is how much money did your company make? Well, it made $20,000. So now $20,000 is what's going to roll onto your personal taxes.
Okay.
So the Schedule C is not for a particular note, it's for your company.
And again, as you have a business, it's recommended that you have a CPA do your returns and kind of code this. And there's been a few questions about, CPAs you work with, which we can, at the end, talk about those if there's any recommendations or just the type, because one of the questions that did come up that I'd like to answer now is, for note business, do you need a CPA that specializes in notes, or is it just like any other business essentially that, the expenses are the expenses as long as they're categorized by the bookkeeper and the CPA, whether you're, selling cars or buying notes and selling notes? Is there a difference?
There is. I've certainly had clients use CPAs that were not real estate investing focused, and I was really surprised by some of the questions that they would ask the person, about their books. It's definitely helpful, but like anyone, if you're giving them a profit and loss and a balance sheet and they see it, I mean, they are a CPA, so they would see those assets and those liabilities, and they should know, or they could easily research how they should handle those on your taxes.
Okay. Okay. Want to keep.
Actually, the main reason I wanted you to see the Schedule C is because when you're doing your own books, when I take over doing someone's books, I find very creative accounts that have been created. There's always one called reimbursement. Well, there's no such thing as an account called reimbursement. So I like to show people that if you're going to do your own book, so that you try to just keep things falling into those categories.
Okay. No, that's good to know. And correct me if I'm wrong. I mean, is your thought to have, less categories or in try and put things in, or to have as many categories as possible?
Really, there are set, standard accounts that we use in bookkeeping. So it is streamlined, but you do want your books to be clear. But these categories you're seeing right here are most common and most commonly used. And I can't, in your business and doing books for note investors, there really aren't many other categories that I would use than what you see right there.
Okay. Yeah. I'm getting a lot of comments from people like, wow, I can't believe the high level boot camp trainings are not, not deductible.
Oh. I know. But you have to think of it as this. This is something you want to do. And it's almost like reading a self-help book. I'm a real estate agent as well, and I have continuing education I have to take to keep my license.
Yeah. That
is required training. But when we just want to learn and better ourselves, that's the fine line that that you guys are walking.
Yeah. So if somebody went and took like a college class on accounting or on finance to understand more about their books, that's kind of self-education. So your thought, and again, I know you're not an accountant and stuff, but I'm just curious to your thought on stuff like that.
No, it's really not a business expense. It does just, it does just help you. Can that be deducted? It can, because you can still roll it into something else, and you can put it under other expenses, training. But if you've got $1,000 on your tax return, it's not going to jump out. But when if you're showing your company has lost $5,000 overall, and you have $4,000 in training, those kind of things are going to stand out.
Okay. That's very informative. That's, I didn't know that. So that's good to know. So one question then on that is, so if it's not deductible and it's not really a business expense, would you even 1099 the trainer?
If it's on your books, if you have it as an expense on there, then you 1099 them.
Okay.
But for example, I believe We Close Notes, I believe they're an S corporation, and so they don't get a 1099 anyway.
Yep. Okay. So, okay. Sorry to jump in. I'll let you keep going, but I think this has been some very good content, and I think it really has been very, I'll say note focused, which, I find to be very valuable, and I hope everyone listening finds it valuable as well.
Yes, and it's. I know it also sounds a lot like just running a business, not specifically for notes, but it really is, because it will guide your transactions and how you run how you do run that your company. And again, back on the trading, like I'm not. It's out there, and it's certainly stuff that can be captured, but I really like to emphasize it just because it really just helps you keep it in check as far as how much you actually spend, and maybe even how much that you just think that you can take as an expense on your business.
So one person mentioned that talked about taking it and amortizing it over like 5 or 7 years. Take the training, you've spent $15,000 and take $2,000 this year, $2,000 next year, over 5 or 7 years. Have you heard that?
In bookkeeping, when you write the check, that's when it hits your books.
Yeah.
So you wouldn't really have that ability if you're doing bookkeeping.
Yeah. Okay. Okay, good. So now it's a good topic on the Schedule Cs, because I know, people who are getting out, there's even been confusion on which schedule to use. And one thing I'll mention is that if you're an S Corp or, a multi-member LLC, then you'll be issuing K-1s and stuff, which might, is something that your accountant does a little differently.
Right. And an S corporation, I believe the form that you can look up is 1120S, as like Sam.
So, okay.
So yeah, it does vary on the type of entity. And the other thing I will mention, since it's almost time to pay taxes, when you pay, or maybe you're getting money back, but if you pay the IRS, you need to make sure you pay from your personal account and not your business account.
Oh.
Again, depending on the entity, so do kind of, tweak that to your own situation. But for the most part, an LLC, as you see on the Schedule C, your taxes, well, it says taxes and licenses, but that doesn't mean income tax. Because what you're doing is the profit or loss of your company rolls onto your personal return. And that's the tax you're paying. You're paying your personal return tax for an LLC. Now you can take money out of your, if you have money in there, you can take a draw out of your account, your business account, put it in your personal account, but you should pay from your personal account.
So that, as you're talking about paying Uncle Sam, if you have a note business that is doing very well in a year, and you're going to be making money throughout the year, it's my understanding that you should be paying Uncle Sam, some money quarterly, and make sure by like the third quarter year that you're, caught up in a sense of being, making sure that you haven't paid. If you're making $250,000, that by the third quarter you've only given them like $5,000.
Yes. As someone self-employed, yeah, that's definitely quarterly is the way to go.
Mm-hmm.
And I know we're getting close to the end of the hour, and I know we weren't specifically talking about how do we enter particular transactions, but like I said, I do set up half-day trainings where we work on just your books. So definitely feel free to reach out and do that. It helps you feel more comfortable with what you're doing.
Okay. Do you have an extra 15 minutes to take some extra questions, Debbie?
I do.
Okay. So if people have additional questions, we can, I usually set them for an hour, but, if we've, Debbie's, fortunate enough to give her some additional time. And then at the end, I'll have Debbie provide her contact information. Like she mentioned, a few people asked who may have joined late, asked if you were, local and stuff. And we just want to reiterate, Debbie's in Texas, but, she works with people from basically all over the U.S. So, but we'll put that information in a little later.
And that's all the items I actually had on my list. So I can do questions as long as you would like.
Okay. So let's see. We got, so question came through is, someone asked, is there a good way to document that you're a real estate professional? And I know that has some implications with taxes and stuff, but
yes, nothing is popping into my mind.
Okay.
Yeah, it's just the type of business that you set up, just like, it's just like a hairdresser sets up their business. So,
yeah. So here's one, because we had this conversation the other day that I think people would find interesting to mention is if somebody sells a partial note, but, collects the payment still and then issues the payment to the person who bought the partial, that's treated very differently on your books. Well, it's treated differently, correct?
Give me the scenario one more time.
So I have, so if I sell, 20 payments to somebody on a loan, on a note, but I'm still controlling the note. So Madison sends me the money, a principal and interest payment from a performing note, and then I'm giving, an individual a component to that. We talked about the other day how that, all that goes kind of on your P&L as interest earned versus interest. I forget the other term. It's like an interest expense.
Yes, your interest income. Yeah. And they have bought, what is the agreement with the person that has sold?
Yeah. If they were buying, 20 payments of, call it 50% of the interest. I just, found that interesting how you have the interest earned and an interest expense, and it all kind of falls on your P&L.
Right. So it can be entered into the books two different ways. So you get the payment from Madison or whomever. The principal portion gets applied to the asset. So this one deposit from Madison is going to have multiple lines. One is the principal, and it gets applied to the asset. And then you have the interest income. And if it's $100, I split it right on that transaction. $50, I code it to interest income, and that hits the profit and loss as the portion you're getting. And I code $50 to a liability account for that person.
Mm-hmm.
And then when I write the check to that person for $50, that hits the liability account as well and zeroes it out. Like I owe him $50 and I just paid him $50.
Yeah. So
the other way is you can do $100, hits, all of it goes to interest income on your profit and loss. But then you have to turn around and just do a journal entry and move $50 of that to the liability.
Yep. Okay.
That makes sense?
It does for me. I'm sure we have people on here whose heads might be spinning, but so one question popped through, and I'm not exactly sure what's in reference to, but they mentioned, should they use their title as a consultant versus a real estate investor?
Well, I think if you're consulting, you're not providing any type of tangible product. I mean, even though a note is not really tangible, but it's a product as opposed to a service.
Mm-hmm.
I think you'd want to promote yourself as a real estate investor if you're going to actually want to be dealing with the assets, right, and liabilities, because you want to build that reputation.
Mm-hmm. So one other thing I want to mention to people as a tip, because Debbie and I are still working through this, is, and this was, I think, worth its weight in gold for everyone listening, is at the end of the year, you need to, if you're doing your books yourself, go back and balance your books based on the 1099 statements that you get from your vendors, especially your servicer, because Debbie and I are working right now with a situation where the reports that we were getting every month from the servicer got changed, and they didn't really, I'll say, tell us, and we were trying to figure out a few interest payments and stuff, and we got the email yesterday, but it's like, oh, well, what we sent you was right. What we sent you during the year is wrong. And so you want to talk a little bit more about that, Debbie?
Yes, and I will say that these service providers for the note industry are as new to it as a lot of people are now, and so they make a lot of mistakes, and that is one benefit of having a second eye and working through things. And when you're breaking things out to the nitty gritty and it doesn't match a statement, like that's what you're looking for, because you guys really, a lot of times you guys, when you hate to deal with the bookkeeping side of it, which is completely understandable for most people, but you look at the statement and you look at it for what it is. When you have to enter that and break it down dollar for dollar and it has to match everything, you'll start seeing the errors that are out there. And sometimes you don't know until the end of the year. And so that's when I always have to have those official documents. I have to have a 1099 from them saying, here's how much interest we paid you. Well, if QuickBooks doesn't show the same amount, then we have to figure out why. And that's what Chris and I have been doing. And yeah, along the way, they're like, oh yeah, well, we changed that. And the other thing is sometimes their statements or their reporting, even if they try to tell you, sometimes they just don't have very good reporting and it's not clear.
So yeah, and I'll be the first to tell you, if I was doing my books by myself and was trying to figure that out, I would have lost my mind, and I easily would have spent, I can't even tell you how many hours.
Yes.
I spent probably 4 hours just trying to help Debbie to understand it myself. Yeah.
Yeah. But like I said, that's a benefit, because I try on my end and I'm like, okay, if I just cannot get it to match, then, I'm feeling like I'm missing something, right? But then I go to Chris, for example, and I'm like, you know what? I cannot figure this one out. I don't know why it doesn't match. And that's the cue that something's probably wrong along the way.
Yeah. One other thing I'll ask, and if you touched upon this earlier, I apologize, but from when you get a payment from your servicer, you sometimes get principal, you get interest, and you might get late fees. Okay.
Yeah.
When you code those, some go in assets and some go in liabilities, correct? Can you talk about that a little bit?
Yes. Yes, those are like I said, again, these are multi-line entries when those come in. And a lot of people think, I literally have books where they got a check from Madison for $450. They kept $250 and they gave their JV partner $250. And it's not that simple because they were giving principal away when you shouldn't really give principal away until you get all of the principal back. So now I'm better detailed than that. So you get the statement or you get the deposit from Madison, and you're breaking that out. So as I kind of said before, one line is going to be the principal. Well, if you paid $10,000 for your asset and you're getting $20 in principal, you're going to apply that to the asset, and now the value of that note is $10,000 or $9,980 because now you've gotten $20 back. Mm-hmm. That's just one portion of that deposit from Madison. Mm-hmm. So then you get the interest, and we talked about that. Maybe you split that. Maybe you give it all to your JV partner. But then there's also a line of late fee interest or income that they had to pay, right? The borrower paid late. So it's treated very similar to interest income. It just depends with your agreement with your JV partner again. But maybe you keep all of the late fee income and therefore you code that particular line to late fee income. So it's not interest income, it's late fee income.
Yeah. So, and again, that goes on the liability side on your balance sheet. So you got your principal kind of, if you think of, a top and bottom, the balance sheet at the top, you got your principal, and then the interest and any late fees and stuff goes at the bottom under your liability. And, that was, again, educational for me because I'm looking at like, okay, Madison paid me $500. Where is it? I figured it would be like all together and it's separate. So it takes a little learning curve to understand that.
Right. And at the end of the year, they're going to give you a 1099 interest, 1099, that tells you how much interest they've given you. But that late fee income is not part of that. So that's why you break it out, right? It's not just all income. It's interest income and it's late fee income.
So good. Okay. It looks like I think everyone, I don't see any more questions coming through. I'm going to put your email. Is it okay if I put your email address in the chat box to send out to everyone, Debbie?
Sure, absolutely.
Okay. And if you want, just repeat it while I'm typing it in. You're more than happy to. Or tell people how they should contact you.
Okay. It is Debbie, so it's DEBBIE at DM, D like dog, M like Mary, bookkeeping.net.
Okay. And you mentioned people can set up, like a 30-minute consult with you as well, correct?
Well, I have, I usually do a half day, but I mean, okay. I don't charge for you just to call and say, hey, do you think this is something you can help me with, and we can schedule it for a later time?
Okay.
And that may sound like a long time. I do 3.5 hours, not 4, but it goes very quickly.
And before we go, another question is, are you taking on new clients?
I am, yes.
Okay. And just people understand kind of the process. I'll explain, how I view it, and Debbie can chime in and kind of explain, a little bit of, how the books, quote, I think should be done, or how they get done is, typically, if you I use Wells Fargo. So when the bank statements come out, those will get downloaded, and you can give Debbie access to download them as well if you're comfortable. And then she starts putting them into basically QuickBooks, and once she gets them put in and then downloads the information from Madison and some of your other vendors that you give or provide her, typically at some point during that month she will send to you the balance sheet and the P&L, and she'll highlight the questions that she still has open that might need some response to it. And at that point in time, you can either email her, or if there's some that might be a little quirky, sometimes Debbie and I might just get on the phone for a half hour and go through them. The one thing I'll kind of tag along with that for people who are newer or also working with partners for the first time, you got to remember your books are always typically 30 days behind. So, if Madison gives you a payment in January, and this is based on how you should be paying, when you want to give out quarterly distributions or however you do it, if let me rephrase that. If a borrower makes a payment, towards the end of January, you might not see that payment till first or second week in February. And then, you're not doing your books and finalizing them till the middle of March. So there is some lag. That's one thing you should explain to people who you're associated with. If you're paying them, is to make sure, hey, if a payment, if I'm paying you on March 1st and somebody made a payment on February 20th, that payment's probably, it's not going to be included in that distribution. So I just want to kind of mention that, because sometimes, you might get a borrower to reinstate on a loan, and you let your partner know, and they're like, well, how come I haven't got that yet? And it happened, call it, let's say March 7th. It happened on February 27th. Basically we're doing our books kind of, and Madison may not even have paid me yet. So say Madison paid me today for that. My books aren't going to be clear to know what the whole balance sheet for that asset is until probably a month from now. So just want to make sure people mention that. So
right. And I find that a lot of times when I get phone calls from new people, they're really stressed because they really don't have books, and they're trying to report to a JD partner and pay them. Mm-hmm. And there's a panic in there. It's definitely not something that you should rush. And I think if you try to pay more often than quarterly, then you are a trooper. So yeah, you definitely, and then also with bookkeeping, it's set up like that because, you guys need affordable bookkeeping, right? So mm-hmm. I'm almost out, for the most part, I'm allocating about a half a day a month for most clients, depending on the size. Mm-hmm. Well, there's a cost associated with that. So if you're wanting things quicker, or you want a bookkeeper to do it every week for you, that's an option for more timely, but there's always a price that comes with that.
Yeah. And what I'll mention, and you can block your ears right now, Debbie, but I'll tell you, people, it's the best money well spent. And if you were trying to do this yourself, I guarantee you'd be spending at least 4 to 8 hours per month. And you can use that time for bettering your business and have, when I say 4 to 8, it's actually probably about 24 hours the reality if I figure it out. But I mean, you look at, what you're trying to do with your business and, trying to grow it, and take those 3 days that you're doing your books versus working on your business. Use an expert like Debbie who can get this done for you, get it done correctly, and get it done in much less time. And I'll tell you, the cost, it pays for itself 10 times over. And that's the part I didn't want you to hear.
I'll be really honest. I try really hard to make it very affordable, and I probably should charge more because I really have to work hard to get it done in the time that I allocate for it. So it could be a great expense, and I'm sure there's probably people out there who charge a lot, but this is what I like to do, and there's a need in this area, and it has to be affordable, especially when you're just starting out.
Yeah. And the other thing too is, like I have multiple entities, and others might have them as well, because you might, market with one entity and buy in another. So just even having the multiple entities and trying to understand, and one of the things that I enjoy working with Debbie on is when I have questions on, okay, how should I, pay for this in regards to making sure it matches in the books, like she mentioned earlier on about, trying to pay directly, not having JVs pay. Because, early on, I used to have the JVs wire money directly. And she's like, no, you don't want to do that. So, it's just the added value of that is so beneficial as well. And a question did come up that said, what percentage of your business is made up of note investors?
Real estate investors is probably 95% of my business.
Okay.
And and
And
a huge percent of that is note investing.
yeah, I can, name a half a dozen people off the top of my head that I know personally that use Debbie, and one of them was the one who referred me to Debbie. And I'm not going to, mention your names on here, but there's a lot of people who have been in this industry for several years and have done some amazing things, and are really, kicking ass out there that use Debbie. So I think that just goes to show if you, were to list some of the people who in this business who you highly respect and see them doing things properly. A lot of them I know are the ones who use Debbie. One other question: JV shouldn't be wiring money directly to you. One question came: should the JV be wiring money directly to your business account?
I think she may have just misinterpreted what we were saying. They should definitely send the money to you, but sometimes they send it directly to the seller.
And when we say you, it is your business, not you personally.
Oh, yes. The business. So definitely your JV partner should absolutely wire that money directly to your business account.
Yeah. So, and the reason again why that's the case is so that gets tracked when you download your bank statement. So we know, and then typically you'd have a corresponding wire that goes out the door. So, like for me, I'll be honest, I don't mark up, my notes. Like if I'm, in my JV agreement, I have money, how much the acquisition was and holding costs and certain other things. But, if I'm buying it typically for 15,000, it's, I got 15 coming in from somebody and now I have, you'll see a 15,000 typically, going out the door, or that it might be broken up and stuff. So, okay. Good. Well, Debbie, thank you very much for the extra time. People also mentioned about a website, which your website is dmbookkeeping.net, correct?
Yes.
So if people want to reach out to Debbie, you can either, again, contact her at debbie@dmbookkeeping.net, also, or at dmbookkeeping, I'm sorry, or dmbookkeeping.net, the website. It'll also be in the show notes where you can reach out to her. And like I said, I've been extremely satisfied, and that's why I wanted to have her on the show today, because there's been a lot of questions for note investors who are scrambling to try and get their books done and have a lot of questions. And I wanted to try and answer a lot of those, as well as let people know there are options out there, because it is difficult, I'll be honest, to find people, real estate investor bookkeepers, especially those that understand notes, because most people don't actually understand, like thinking they're like most people were with a note. Oh, you're buying the property, so it's rental income. Well, no, I'm buying a mortgage, so it's a loan, and it can really confuse people. So it's great to have somebody that, the investor is not training the bookkeeper on the business. Debbie already knows that. So that's one of the things it's just so thankful for.
And thank you for all of that, Chris. But if you are starting to stress about your taxes, do not rush them. Just file an extension and just make sure that you know all the money is organized and ready to go. And when we're talking about all of those transactions coming in and out of your business account, I'm working with people to do their 2016 books and their 2017 books. And it is hard to remember what happened. So everything that hits your bank account is your history. It's your audit trail. It just will make your life much easier.
And I agree 100%. And I actually recommend, once you get to a certain level, that you are very detailed. When you're mail, I use Wells Fargo. So when I use their bill pay, I make sure in the comments that I put like the code or the account or wherever it's going, because even on deposits, I'll put a $2,000 deposit in the bank or something. And then 3 weeks later, I'm like, okay, what was that for again? I can't remember. And so, it's definitely important to just keep track of your finances. It's part of the business everyone hates to do, because it's kind of like filing or keeping your organizational documents in order. It's a lot of times people don't like to do it, but it's absolutely necessary. So.
Yes, and some of us like to do it. So.
So I mentioned to you the other day, when I grew up, my mother was a bookkeeper working for an accountant. So I remember I used to have to do it on the big green sheets on the big legal pads. And, when you're off by pennies and stuff, it would drive me nuts. And actually, let me see, my mother was on earlier. If she's still on, yet she is. Well, thank you for giving me that education, Mother. But, actually it helps because I, still remember some of it, and it's very educational. So,
Yes.
well, again, thank you so much, Debbie. It's a pleasure. And again, people want to reach out to her. We gave contact information, and just want to wish everyone a happy evening and go out and do some good deeds. So thank you all.